The tweet echoed like a thunderbolt. Sharp, angry, uncompromising. President Trump, never one to shy away from confrontation, had struck again. His target? Jerome Powell, the very man entrusted with leading the Federal Reserve, Trump's weapon of choice. Truth Social, his digital megaphone to the world. Powell's termination cannot come fast enough. The message blared, a digital indictment delivered with characteristic Trumpian bluntness. The financial world reeled. Markets, already jittery from recent tariffs, shuddered at the news. Trump, it seemed, had grown impatient with Powell's cautious approach to interest rates. The president, convinced that lower rates were the key to unlocking economic nirvana, saw Powell's measured pace as an obstacle, a roadblock on the highway to prosperity. Rumors swirled around Washington like autumn leaves in a hurricane. Was this just another Trumpian tantrum, a tempest in a teacup soon to be forgotten? Or did it signal something more serious? A genuine threat to the carefully crafted independence of the Federal Reserve? The answer, it seemed, held the future of the American economy in the balance. In the stately halls of the Federal Reserve, Jerome Powell absorbed the president's attack with a stoicism honed over decades of public service. A veteran of both Wall Street and Washington, Powell understood the high-wire act he was being asked to perform, to steer the American economy while navigating the treacherous crosswinds of presidential pressure. Powell, however, was no stranger to pressure. He had stared down financial meltdowns before. He understood the stakes, the delicate balance he was charged with maintaining. The Fed, he often argued, was not some political plaything, but a bulwark against economic chaos, a guardian of stability in an increasingly uncertain world. The president's words stung, but they did not deter him. Powell, in public statements and private assurances, held firm. The Fed, he insisted, would chart its course based on data, not diktats. Its decisions, he assured a jittery nation, would be made in the best interests of the American people, free from the taint of political interference. Trump, however, seemed undeterred. He chafed at the legal constraints that seemed to shield Powell from his wrath. The Federal Reserve Act, that intricate tapestry of legislation woven decades earlier, stood as a formidable obstacle to the president's ambitions. It stipulated that a Fed chair could only be removed for cause, a term that connoted gross negligence or malfeasance, not mere disagreement over monetary policy. Legal scholars, their dusty tomes suddenly thrust into the harsh glare of the present, weighed in with opinions and interpretations. The consensus seemed clear. Removing Powell without ironclad proof of wrongdoing would be a legal quagmire, a constitutional crisis waiting to happen. The ghost of a 1935 Supreme Court ruling loomed large, a stark reminder of the judiciary's willingness to check presidential power. In that landmark case, the court had affirmed Congress's authority to create independent agencies, fortresses of expertise shielded from the whims of any White House occupant. The Fed, it seemed, was one such fortress, and Powell, for the moment, remained its steadfast commander. As the drama unfolded, whispers began to circulate about a potential successor. A name surfaced, whispered in hushed tones in the corridors of power: Kevin Warsh. A former Fed governor himself, Warsh possessed impeccable credentials and a Rolodex that read like a who's who of the financial elite. Warsh, however, was no mere yes man. He had in the past cautioned against any hasty moves to unseat Powell. He understood the risks, the potential for economic chaos, if the markets sensed even a whiff of political meddling at the Fed. His economic views, however, aligned more closely with the president's. Warsh, a vocal critic of the Fed's approach to inflation, argued for a more hawkish stance, a tighter grip on the reins of monetary policy. He saw inflation as a choice, a consequence of government overspending and reckless money printing, and he advocated for a course correction, a return to fiscal prudence. Section 5. Tremors in the market. The markets, meanwhile, watched with a mixture of fascination and fear. The Dow Jones, that barometer of investor sentiment, fluctuated wildly, buffeted by every presidential tweet, every rumor of Powell's imminent departure. The uncertainty, the very thing the Fed sought to mitigate, was becoming a self-fulfilling prophecy. Analysts, their Bloomberg terminals glowing ominously in the twilight, warned of dire consequences if Powell were to be ousted. Such a move, they cautioned, would be interpreted as a brazen assault on the Fed's independence, a sign that the White House was willing to sacrifice long-term stability for short-term political gain. The fallout, they predicted, would be swift and severe: a stock market crash, a loss of confidence in American institutions, and a global economic slowdown. For Trump, the stakes were high. His presidency, already defined by its share of controversies and triumphs, hung in the balance. A strong economy was his best hope for re-election, a shield against the relentless attacks of his political opponents. But a market meltdown, a recession on his watch, would be a devastating blow, a stain on his legacy he feared he might never erase. Yet, the lure of lower interest rates, the siren song of economic populism, proved difficult to resist. Trump, never one to back down from a fight, seemed determined to bend the Fed to his will, convinced that he, and he alone, knew what was best for the American economy. His advisors, a mix of seasoned Washington hands and Wall Street veterans, walked a tightrope, offering counsel and caution in equal measure. They understood the president's frustration, his desire for a quick fix, but they also recognized the potential for catastrophic, unintended consequences. The nation watched, captivated by the unfolding drama. The very foundations of American governance, the delicate balance of power between its branches, seemed to hang in the balance. Could a president, driven by ideology and ambition, unilaterally dismantle a system designed to safeguard the nation's economic well-being? The question lingered, unanswered, a specter haunting the halls of power. The world held its breath, waiting to see if the American experiment, that audacious attempt to create a government of laws, not men, would withstand yet another test of its enduring strength. The coming days, it seemed, would determine not just the fate of Jerome Powell, but the future of American economic policy, and perhaps the very soul of its democracy. Days turned into weeks, the tension ratcheting up with each passing hour. The president, true to form, kept up a steady drumbeat of criticism, his pronouncements on Truth Social becoming ever more pointed, his attacks on Powell ever more personal. Yet, the Fed chair held firm, his resolve seemingly unshaken. He continued to make his case in public appearances and congressional testimonies, arguing that the Fed's independence was not some abstract principle, but the bedrock upon which American economic prosperity was built. The markets, meanwhile, remained on edge. Investors, their nerves frayed by the uncertainty, reacted to every utterance from the White House and the Fed with a volatility that bordered on the chaotic. The economy, once a source of national pride, was becoming a hostage in a high-stakes game of chicken between the president and the central bank. As the saga of Trump versus Powell played out on the world stage, a profound question hung in the air. Could American democracy, already strained by partisan gridlock and cultural divisions, withstand this latest assault on its institutional integrity? The answer, it seemed, lay not in the hands of politicians and pundits, but in the hearts and minds of the American people. Would they, in the face of economic uncertainty and political turmoil, reaffirm their commitment to the principles of limited government and the rule of law? Or would they, seduced by the siren song of populism and the allure of quick fixes, allow those principles to be eroded, paving the way for a future where economic policy was dictated not by data and expertise, but by the whims of whoever occupied the Oval Office? The fate of the American economy, and perhaps the nation itself, hung in the balance.